We've got some fresh new young talent doing some things that I know you haven't heard before.
1, 2, 3, listen.
Welcome to Finances, your home for all things financial, investment, money and lifestyle. Hosted and curated by the very talented team of certified financial planners, Burke Financial Partners. We almost rolled straight into this episode. So before we started recording, we talked about how many times you and I, or all the planners here, will just talk about random client scenarios. And we started talking about one just before about debt. When you've got some debt, you've got some money. You know, our thought process about what you would actually talk to a client about, how you'd think about what you would do in terms of reducing debt or investing. And I started talking to you beforehand. I said, this is probably a podcast about a couple of client scenarios or potential client scenarios, bearing in mind that these are all changed. The amounts are changed. There's no identifying factors in this for who these clients are. But the scenarios I think were interesting, and more than the scenario, just the thought process that we as advisors might go through when you're presented with someone in that situation. So the two we talked about, I'll start with the first one, which is kind of a combination of multiple potential clients, which is you've got someone that has, and in this example, someone sort of in their mid-30s, got a young family, and they've been presented with a lump sum. Now, a couple of examples that I had was one was inheritance, one was the sale of an asset, but have got a decent chunky lump sum and saying, what do I do with it? And so the question, the entry point for that person, that client, is to say, I've got $600,000, $700,000, I don't know what to do with it. Where should I invest it? So I know that's a very, I'm sure you're going to ask some questions like, tell me more about this client. But
I was going to say, just quickly with that, it almost doesn't matter how much that figure is, because you still go through the same process.
Yep. So
you still step it back.
So let's go the hypothetical client that's in their mid-30s, young family, and they've got $700,000 that's landed in their lap.
So that could be inheritance, a gift, windfall gain, who knows what it is. Something's
sold
happened.
Property,
doesn't matter what it is.
Doesn't matter.
Yep.
And they've come to us because they say, I'm a bit nervous. I've got this money. How do I make the most effective use of it? What are we asking them? What are the questions that we might ask them? Or do you just say, listen, I've got these shares over here. I think they'll be great. They've performed really well in the last 12 months, and they're guaranteed to perform for the next 5 years. So
I think that's what people half expect that we're going to say. But
I know.
Our process would be...
I say that flippantly, but people do think that. They think that there is an investment that we will just say, here's the perfect investment for that, and you should pop it in, and you're guaranteed of making X amount of money, and it's going to be great. But that's not what we do.
Definitely not. I think the biggest thing is getting to know those people. So, and again, sometimes it's the existing client that we're recapping that, and again, recapping who they are, what they're trying to achieve, what their short, medium, long-term goals are. If it's someone new, we've really got to build that up from ground up. So, understanding their family, their family dynamic, their future plans around their family, whether that's having more kids, so they, everything that goes with it. And I think understanding them as people and their ambitions, and then building their ground up financials around that. So cash flow is sort of always the start and end of all of those things. So understanding, okay, what do you do for work? Is it regular income? You're self-employed? All of those, very generic questions to an extent. But we go right back down to those, and we build up from there. So we go, righto. And even if we know the client, it's just a recheck of those things, because we always do that anyway. So let's just sort of, again, we always talk about doing the stock take. For those existing clients, we recheck it, and we do that all the time. For the new clients, it's about starting that process and building that up.
Yeah, and even asking questions. And this is not, people shouldn't be shy if they come to us and they don't know why. They don't know why or what their end goal is, because part of the process of actually talking to us is for us to actually help you unearth it. Now, I'll ask that question. Like in those couple of examples that I've had, recent clients, I'll say, what do you envisage the purpose of those funds is? And some of it might be it's for retirement. Some of it it's to build a new house. Some of it will be actually we're going to have to generate some income from it because my partner's going to be out of the workforce for a while. So what the purpose of the funds informs how we might decide, or what we might decide to do with them, whether we decide to lock some of it up in superannuation, whether we invest it to generate income, whether you're investing for capital growth. And then we start to say, well, what sort of time frame? Like what sort of, like you said that, like what sort of time frame are we talking about? Like, is this money that you're going to need back next year?
And sometimes it might be you need some in a short term, some in the medium, and some you might not need for 20 years. So again, chunking it down and breaking it up. I think the biggest thing is with the structure, like getting it invested in the right location, in the right order of operations is, going off a little bit as an example, some people come in, they've got that lump sum. They could throw it. Some of them go, I want to invest it. Maybe they do want, investing it is actually the best outcome, but those funds maybe are better to go into their mortgage, clear their non-deductible debt, recreate a facility, redraw those funds and invest it then. So they end up invested, but they've got to go through a process to get to that point. And if you get that wrong, it doesn't matter if the investment generates 8% return every year. It's a guaranteed going to be a worse outcome than by multiple percent for the rest of your life if you get it in the wrong order. Yeah.
Well, I think one of the challenges that everyone has when they think about their own money is we kind of think of it in a binary nature. Like you think, I've got this money, I've either got to invest it or I've got to leave it in the bank. I've got to leave it in a term deposit. And there's nuance around that. Like you said, maybe it's in most instances, it's a combination of a lot of things. It's a combination of, well, let's look at your debt. Are we better place to park some off your debt? Do you actually need some income from that? Could we benefit from some tax relief by making some tax-effective contributions into, like, superannuation?
Even asset expenses. Like, I think people sometimes feel a bit hesitant about it, but do you need a new car? Is there anything on your home that needs doing? Because if you don't identify those things and then you make decisions to invest or lock money away or do something with it, and then 6 months later go, oh, we need to get a new car. And sometimes it's unforeseen, but if there's any expectation that you might need those funds, then what? Like if the money's then put into something that maybe there's no access for another 6 months after that, are they then having to take out some bad debt to cover that expense? So, and then I think that's a conflict people have in themselves is when to spend money on things like cars. It's just a necessity. Like, so if you have a lump sum available, we want to know maybe we need to allocate some of that for that future expense as well.
Yeah, I think lining up the next 5 years and trying to put, and it might be travel. Like it might be travel, it might be deposit on a property, it might be a car.
Education expense is a big one for the kids,
and even the things that are unforeseen, we can still quantify those. You can work out like worst case scenarios and how much emergency funding someone's going to need. And all of a sudden you have, so in that example of someone that's got $700,000 and doesn't know what to do with it, you start to pass it out into buckets of emergency funding, kids education, debt reduction, investment, short, medium and long term, superannuation. And all of a sudden we've got a plan. We've got a plan that's actually built around people's actual needs and objectives rather than just a very binary decision. Because I think when people don't get advice and they're maybe scared to, that's when they're at risk of making a silly decision. Someone has told them that they should invest that money into Bitcoin or whatever. I've seen it. I mean, I say that because I've actually seen that happen where someone has said they've been maybe scared to come and get advice and they make a very binary decision just to take cash and dump it somewhere thinking it's the right thing to do.
I think it goes two ways, is they overreach and do that, or they don't do anything at all.
Yeah.
Like there's often just the don't do anything. Oh, I'll just leave it there. And we're all, it's like anything. If you just park it for a week, whether it's, a chore around the house or something, parks for a week, it sits there, it's okay, it gets to a month, and then it gets out longer and longer. Yeah. And then life goes on. And as much as you might have this big amount of money sitting in the bank staring at you, it just sits there.
Yeah.
And it hasn't been used to its greatest purpose. Or even just, sometimes there's an interim measure too. Like often it's not about coming in and nutting out that plan straight away. It's going, all right, let's just park this in an offset account, or let's park it here, sit it here for now, and let's work through this over the next 6 months while you get some other areas of your life sorted out, or you've got a few pendings that we need to work out. I think rushing decisions is something that people often do as well. Like you were sort of saying, they go quickly. For us, it's about just being slow, rational, process, boring, but effective.
Yeah, I think, Jocko, I know we talk about Jocko a lot, but he talks about this process of iterative decision-making, which is he is said in business that sometimes people say to me, he looks like a genius because he's made like one big decision. He said, well, no, I haven't. What I've actually done is make a bunch of small decisions reasonably quickly, and I've not made one big decision without information, and I've not sat and done nothing. I've taken small actions all along the way. Now, that's a little bit like our process of giving people advice, is that we don't want to go from zero to hero overnight, because that is overwhelming for people. But if you can actually take them through the process of step by step, the incremental changes that they need to make people feel comfortable with it, and then by the time you've actually made a decision about where to actually put that money or invest, that you feel really comfortable, you've mitigated risk because you've made little decisions along the way, and you haven't, like you said, just sat with your head in the sand and done nothing, but you also haven't just run the gauntlet and just dumped that money somewhere without the right information. So, all right, I think we've got time for a real short one. The next one, scenario, which again, it's a hypothetical scenario, but we get a lot of referrals from other sources. So we get referrals from things like accountants and solicitors and real estate agents. And we were just saying that one of the things that we've probably done poorly as an industry and as a business is actually explain to our referral partners exactly what we do and the value that we add. And I was thinking, I had a scenario where I had a referral partner that said, listen, I've got a client with a self-managed super fund, and they've got $100,000 that they need help with investment advice. Accountants can't give investment advice. We can. But what I'm struggling with, he said, was how to justify your fees in them giving them advice on that $100,000. So that was the starting point of the conversation. I know before we started recording, I gave you that scenario. And you said a couple of things and you asked a couple of questions, which were the exact questions that I asked. Well, the first thing I said was I've done a bad job of explaining what we do, because, someone thinking that we charge $5,000 to invest $100,000 in a self-managed super fund, and that's done in isolation, is just absolutely wrong. But I suppose, how do you think about that? If that scenario lands on your lap, or you have that question asked by a referral party, what do you do?
The first thing it would be, if that was the entire scope of that advice, is here's $100,000, how do I invest it? I would immediately probably refuse to provide advice on it, because you can't provide good advice on such a narrow focus. Like, what we would do is step it back out and go, okay, where's the money held? Why is it there? How was it created? Who are you? What are your plans? Tell me more about yourself. Yeah. And probably a little bit like what we were talking about with the inheritance stuff. Just go back to the start and go, okay, look, you've got that is one part of your puzzle that we may need to help you with. But who are you, and and tell me all about yourself, and how did you end up here? And understand their full story and where they're trying to get to. At the end of that, maybe there's some advice around that money, but that's well down the track. Like, we've got to work out who these people are, why they're there. Maybe that money shouldn't even be in that location. Who knows?
Maybe
what's
that
the
client
structure?
shouldn't have that self-managed super fund, or maybe that self-managed super fund's in place for a reason, because they house their business out of it. Is that client, are they pension age, in which case they're going to need to draw pension payments from it?
What's the cash flow? Often I've seen with the self-managed super fund setups is that people have gone, maybe got some limited advice, and they've bought a property and they've got debt on the property and they've got a little bit of cash in there, and there's sometimes an instinct of them to go, oh, we probably should do something with that cash. But when you look at the cash flow of that self-managed super fund, they're actually slowly eating that cash away.
Yep.
So then it's a matter of, okay, we probably shouldn't be investing this cash. We probably need to get more cash in there, or you need to do something about that loan or something about that property inside of there. And again, there's so many different ways that could go as well. But you can sort of understand that you can't just make a decision about a scoped, limited piece of one asset class, one component of their financials.
Yeah, and it's nice to hear, when we talked about this off air, it's nice to hear you say exactly what I had said, which is that basically we expand our view on that client. Like, you start with and people do come to us all the time with an immediate need, right? It's not unusual for people to come with just a limited scoped event or item that they think is the trigger.
I'd say that's the majority, not the minority.
Yeah, and so, but our job, and this is what we do, is we start with that entry point, that trigger event, that I've got $100,000 I need to invest, and then we start to take our vision out. We start to, I'm using my hands for those people that are listening, but we expand our vision on the client's scenario from the investment to what structure they have, to their individual situation, to their non-super assets, to their protection, their estate, their structures, and then you start to get a picture about their objectives and what they want. Then you can start to say whether or not there's a need to actually provide advice, or what advice is actually required on that original trigger event. And it might be that there is advice required on that, but it's done in conjunction with, or as you said, it might be that you get to the point where if that is all that client wanted, we might not be able to help them. But I would say, don't not come and speak to us. Like, come and have a chat with us. You don't lose anything from actually coming and sitting down with us, because we don't charge a financial planning fee for our initial appointment. Yes, we charge for our initial appointment at an hourly rate, but you can come and have 2 hours of our time. We can sort of dissect all of those things about your broader situation and work out whether or not advice is right for you, rather than sort of panicking and think do nothing because it's going to cost you too much.
Yeah.
Is that fair?
100%. I think, again, I think I said to you, we've done such a bad job of explaining to other professionals and other, potential clients, people, family members even, what we actually do. You know, people ask me questions all the time, or make assumptions about, I wouldn't be the right, I don't have enough money to speak to you, or, I've only got this much to do, or I only got this or that. Like, we've just done a poor job of explaining our role. And I suppose through the podcast, the idea is that we give some lift sort of the veil on that and explain our mindset around it, and that just about anyone gets value out of at least an hour, 2 hours running through it. At worst, they'll leave going, all right, I'm doing pretty well here from a cash flow point of view. I need to hit these couple of triggers, and maybe then I'm ready to step it up into something else. But, rarely, unfortunately, again, it's not having to go at people, because it's a complex world, and time is, there's only so much time in your week and day that you can spend looking inwards at your own situation. Like, I can't think of anyone who's come in and I've just gone, you're nailing absolutely everything. There's nothing you can do to make your situation better. Like, I couldn't think of anyone.
Yeah, I can't either. In 23 years of being in this business, there's always something. Like, that's why we enjoy having, even your view on a client situation to mine, to Peter's, to Delta's, to Shay's will be different. And so having different people look at a client situation is super valuable. So having someone that's, again, removed from your situation emotionally to be able to give you an impartial opinion or view on what you could or should be doing, I think is super valuable. So if you're out there listening to this and you've sort of hesitated in actually seeking advice, don't panic about the cost. Come and chat to us first. You can catch up with us in person. You can do it online. We can give you a call. I think it's just that first step of actually sort of laying your situation on the table can be scary for some people, but don't be shy. Look us up, and we're happy to help. You got anything else, Ben? I got 11:30, so thanks for that. We'll see you next week.
Jay.
We hope you enjoyed today's episode. If you're keen to understand more about how financial advice could benefit you, follow us on Instagram, Facebook, and Twitter at Burke Britain FP, or Google Burke Britain Financial Partners. Check out our client reviews, testimonials, and make a time to meet one of our certified financial planners by clicking Book Now on our website. Thanks for listening.
Any information contained in this podcast is of a general nature only. No account was taken as to the objectives, financial situation, or needs of any particular person. Therefore, before making any decision, listeners should consider the appropriateness of any information with regard to their particular objective, financial situation, needs, and seek independent advice from a licensed professional specific to their circumstances.
All right, hit it.
That translates to, don't be a moron and act on what some random person says on a podcast. Take personal responsibility, do your homework, ask questions, and speak to an actual human that knows what they're talking about before you do anything. PB Financial Solutions Proprietary Limited, trading as Burke Britain Financial Partners, are authorised representatives of AMP Financial Planning Limited, AFS, licence number 232706.